A rally in IT stocks powers up the indices. Realty and oil and gas stocks also clock in gains, while autos and healthcare drags. The mid-caps also lag today. TCS says FY25 is going to be better than FY24, even as Q3 numbers beat estimates. A possible turn in BFSI spending also augurs well for the sector, and Infosys, which too manages a better than expected show. IT stocks all rally hard. Investors pair positions and analysts turn cautious on Polycab after an IT department release points to unaccounted cash sales involving unauthorized dealers without naming the company. Polycab maintains it has not received any communication from the IT department. And oil flares after US and its allies launched large-scale retaliatory strikes against Houthis in Yemen following attacks on commercial ships. The Iranian Navy seizing an oil tanker in the Gulf of Oman only adds fuel to the fire. Good afternoon and welcome to Business Lunch. Those are the top headlines that we have for you this Friday afternoon. I have a good-looking screen to look at today. The market is up 200 points right now, so holding very well and very comfortably over that 21,800 mark. We did hit a fresh high today and powered completely by what's going on with big tech. We did get, no negative surprises from two of the big companies which posted earnings. And on the back of that, you have the index, the IT index, which itself is seeing a near 5% move. Names like Infosys up 8% right now. All five of the top gainers on the Nifty are from the tech pack, so that's holding up very well. What's also doing well are the mid-cap IT stocks, following these gains. So names like Sonata, Cyient, something like a Forsource, pick whichever one you want, all of them doing very well. The banks also today have done well. You have SBI, which is, seen a big move higher. You have ICICI Bank, which is higher as well. In fact, the banking index in itself is up over 300 points right now. It is still negative for the week, but there's been a big trade that you're seeing on the banks today. A lot of the PSU really contributing to the gain seen for the market is Reliance. We've been seeing that move over the last 2 days. And once again, today it's doing well. In fact, if you take a look at it for the whole week, Reliance is up around 4.8. Going badly on the downside, some auto, some consumption. But all in all, this is a very good looking screen. Mid cap, small caps, not as good as the frontliners, but you still have a very positive advanced decline. So that is the shape of the market right now. Let's kickstart the show by talking about the big story, which is, of course, big tech. We, like I pointed out, Infosys and TCS are both surging in trade. And we have Rima here to really wrap up the results and what the management had to say for us. Rima.
TCS has reported a revenue margin beat. For Infy, revenues have declined on a quarter-on-quarter basis, but still much better than what the street was expecting, or not as bad as what the street was fearing. There are two key takeaways from the TCS management, which is a read-through for the entire industry. One, FY25 is going to be better than FY24. Analysts knew it, but it's always better when it's corroborated with the management. And also, when asked about the overall environment, the management said, Kriti, the CEO of TCS said, we feel reasonably optimistic going into FY25. The second one, and this is the big one, BFS returning to growth. If you know, more than 30% of the industry revenue comes in from BFS, and BFS is where we've seen the maximum pressure of the weak macros. If BFS is returning to growth for TCS in Q4, it's a big call and a big read-through for the entire industry. Also separately, if you note, in the last 1 year, it's more the mid-cap IT, it's the turnaround plays like your Wipro, HCL Tech, which have done very well. So the Nifty IT index has gone up 26% in the last 1 year, where Infy and TCS have lagged. Infy in particular, even with the up move today, is only up 7%. Now here's what brokerages have to say. Bernstein say the Infy management reiterated that its deal wins should start ramping up from the end of FY24, and they're forecasting a 10% revenue growth for next year. Jefferies has raised its EPS estimates by 2% to factor in the beat. While Kotak says that they've cut the Infy revenue estimate for next year to 6.6% from 9.1%, and for TCS too, they've cut the FY25 revenue growth to account for a cautious start to the budgeting cycle, while they are expecting a recovery to only take place in H2 of calendar year 24. But brokerages are more bullish, post these numbers, post the management commentary, and while the management may not have spelled out that things are recovering on the ground, they're still calling it status quo. I think the underlying message from the body language is that things are improving, and analysts too are reading the numbers with with rose-tinted glasses, maybe.
All right, that is showing up on all of the stocks. Reema, thanks a lot for that. In fact, let's get in a word from the TCS management. Reema was just talking about the fact that we had a conversation with the top team at TCS. So listen in to what they had to tell us.
One last question. F525, right, is what everyone is focused on. Now as compared to the end of the second quarter, how many more degrees optimistic or lesser optimistic are both of you? I mean, if I can...
I don't want to put a degree.
Or are you is the same?
We are optimistic, definitely.
Okay. 5% more, 10% more optimistic? It's an unfair question, but...
I would say reasonably optimistic.
Reasonably optimistic. And yes?
FY25 will be better than FY24.
There are two major headwinds for us in BFSI last quarter. There are some large programs coming to an end and the seasonal furloughs. And if you would, going forward in Q4, we don't expect, at least the furlough will not be there. So that would provide a tailwind for Q4. I would like to believe that probably like it's bottomed out, but a quarter or two will tell us. But signs are positive. Retail probably should turn positive in near term.
All right, that is the word from the top team at TCS. But with that, let's move on and talk about the key cue that we're all looking at today, which is that the December Consumer Price Index as well as the November Industrial Production Index data will all be announced today at 5:30 p.m. We have Lata here to take us through the details in terms of what we can expect. Lata, what are the numbers that we're looking at today?
Well, let me throw some of these numbers at you. It's expected to come in at 5.9, which may look a little worse than the 5.55, which we got in November. But I wouldn't worry so much. This comes over a 5.7 year ago. The core CPI, which is the one that we really bother about, is just about 3.9%. Those are, largely China slowdown. Everything that's imported is not as expensive as it was. Metal prices down. So that's not going to be a bother. That's the one that's really bringing the inflation down. Food inflation has been the worry, but that's going to come in at 9.6 more because the December of the previous year prices were really low. Actually, November over December, or rather December over November, prices have actually fallen. Optically, it may look like, the food CPI may come in at about 9.5% compared to 8.5% in November. But month on month, prices are expected to have fallen. I mean, we know we are not grumbling anymore about tomato prices and onion prices as much as we did in November. So food prices have largely behaved themselves. Therefore, this is an uneventful number. I don't expect any shocks. If it is not 5.9, it may be 5.85 or 5.95. That's about all. And it won't even matter in terms of policy. And I'm just giving you the math. The RBI average for Q3, that's October, November, December, is 5.6. We already know October and November, there the average is 5.2. So even if we get this 5.9, the average is going to be less than what the RBI has forecast. So if anything, it is a benign number. And all said and done, are we really looking only at CPI number? The bond markets are looking at what the US CPI number is, at when the Fed will cut, at how much bonds are going to be bought by the inclusion in the bond index, by the fiscal deficit that will come out on the vote on account. So this is not really a number that's going to shake the bond markets. And nevertheless, we have to keep it on our radar for policy purposes. November IIP is an even less eventful number, because we know that the full year growth is 7.3% according to the forecast, that full year industrial output is 7.9%. So just for the record, it's expected to come in at a very tepid 3.5%. Not to worry, nobody will worry, because everyone knows that a lot of output was done in October to meet the festive demand, and therefore there would be fewer working days in November because of festivals, etc. So it will be 3.5, not a very shining number, but no one will worry.
All right, Lata, thanks a lot for taking us through what we can expect on both the CPI and IIP. But with that, it is time for a short break. On the other side, US and UK have launched airstrikes on Houthis in Yemen in response to the Red Sea attacks. We are going to bring you more on this story when we come back. Hey guys, welcome back. You're still tuned into Business Lunch. Now, an interesting deal may be brewing in the utility space as the thrust towards renewables gains pace. Sources tell us that a large fund infusion in a leading private utility company may be around the corner. So Vivek is here with the details on this. Vivek, what are you picking up?
Well, that's right. So, the stock that we're talking about and the company that we're talking about is JSW Energy. Sources indicate to us that there could be a potential large fundraise that could fructify soon in the company's subsidiary, the renewable energy arm of the company that is known as JSW Neo. So now what we understand is that a lot of Middle East funds or West Asia funds like we call it, along with that Qatar-based funds and also certain private equity investors, who have a large wallet share, are the ones that are actually looking at picking up a substantial stake in this JSW Energy subsidiary, which is JSW Neo. We understand that there could be close to a $1 billion infusion that could come into JSW Energy. We believe that these funds could come into tranches, and we believe that talks as well as the fundraising meets are ongoing at an advanced stage. We reached out to JSW Energy to understand from them, and to clarify on this particular development. At this point of time, they have not offered us any comments. What does JSW Neo do? Remember, it's the renewable energy arm of JSW Energy. The company is present in power generation, but remember, it's present in the solar, hybrid, as well as the wind energy portfolio only. They are also present in the energy storage segment. So battery storage and hydropump storage is one particular place where they are present. And also, they are present across the green hydrogen derivative space as well. Total portfolio of the company so far around 5.9 gigawatt, but the company has said that by 2026 they intend to increase it to 2026. So we understand that the majority of the fundraising, if it fructifies, would be used to go ahead and increase the capacity over here. It will be an interesting deal if it does go through. Remember, the last deal in this particular sector was Mubadala coming in as far as Tata Power's renewable energy arm was concerned. So it will be interesting at what rate it happens and what will be the valuation that they ascribe to this largely and strongly outgrowing portfolio of JSW Neo.
All right, waiting by for the details there, and very interesting, Vivek. Thanks a lot for getting us all of those details. But moving on now, sources are also telling CNBC-TV18 that the government is looking to increase their cover under the Ayushman Bharat scheme. Timsi is joining us with more on this. Timsi?
Well, as you rightly said, what we are picking from sources is that the government is considering hiking Ayushman Bharat cover, and the proposal is to hike the current insurance cover by up to 50%. This hike in cover is likely to be announced in the interim budget. However, there is no final decision as yet. And just to remind our viewers that the current cover under PMJAY, that is the particular scheme that we are talking about, is 5 lakh per annum for a particular family. Also, when we see the performance so far, well, till now about 25.21 crore Ayushman cards have been generated across India, and the number is soon going to reach 30 crore plus. Also, more than 5.68 crore authorized hospital admissions have been recorded, and rupees 69,961 crore authorized hospital admission amount has been registered. So let's see what is the proposal that finally gets cleared and makes it to the budget, or government would like to wait for the general elections to announce this, because it will have a huge voter multiplier effect. Back to you.
Okay, Timsi, let's see when that does come through. But thanks for bringing us those details. Hey guys, welcome back to Business Lunch. We've been talking about the market holding up very well, which it still is, over 200 points in the green. And of course, tech is a big contributor. The other big move is coming in the real estate pack. Today, the index is up around 1.8%, but if you stretch it and look at it for the week, it's seen a near 5% kind of move as well for the Nifty real estate pack. So names like DB Realty, Ashiana Housing, Macrotech, some of the smaller real estate players really having a good day today. And today's a very stock-heavy day, so a lot of names, moving around well. Something like a Polycab doing well. Karnataka Bank has seen a big move higher after a brokerage has initiated coverage. So there's a lot of action in this market. But for now, let's talk about something that everybody has been waiting for. India's longest sea bridge, the Mumbai Trans Harbor link, will be inaugurated today by Prime Minister Narendra Modi. It will reduce the travel time from Sewri to Navi Mumbai to just 20 to 25 minutes. This is versus the 2 hours that we had earlier. So Sonal is here to take us through this, how it will really ease the traffic congestion that we see in the city and why it is so important. Sonal.
First, at 21.8 kilometers, the Mumbai Trans Harbor link is the longest sea bridge in the country. It will connect Mumbai to Navi Mumbai, which is a long-awaited connection. The bridge will begin from Shivri in South Mumbai to cross Thane Creek north of Elephanta Island and will terminate at Chirle village near Nava Sheva. The Trans Harbor link will reduce the travel time from 2 hours to around 20 minutes. This is the reason why everyone has been waiting for this bridge. Now, of this 21.8 kilometer long bridge, the sea length is around 16.5 kilometers and land portion is 5.5 kilometers. It will be a 6-lane bridge with 1 emergency lane on both the sides. This will have interchanges at Shivri in Mumbai, there's Ulve, there'll be Jasai and Chirle as well. Now, MMRDA expects 70,000 vehicles to use the bridge daily for commute. And after a lot of to and fro, the toll has been fixed at 250 rupees per trip for this bridge. Now, the idea is to levy it for 30 years to cover the project cost for 22,200 crore rupees. The Trans Harbor link and the new airport opening up in Navi Mumbai could significantly improve connectivity to the extended eastern suburbs, that is Navi Mumbai area. A reduction in commute times and improved accessibility of newer suburbs only lead to more real estate development in these areas, but will also drive price increases across the Mumbai metropolitan. There could be significant volume increase over the medium term following the infrastructure boost. Also, improved connectivity within and outside the city, including the new airport, should trigger new economic activity and office demand as well. Currently, South Central Mumbai and select western suburbs see nation-high property prices of around 30,000 to 100,000 rupees per square feet. This is, of course, on an average, while outskirts of the city are anywhere between 5,000 to 10,000 rupees per square feet range. This price delta could narrow with this. Renowned real estate developers in the country have already started initiating under-construction projects in Mumbai in proximity to this project. This move is a strategic response to the projected surge in demand for housing units due to the connectivity, which will improve. Now, Panvel is also a well-planned city, right? It effectively connects the city and the western lines because of its already existing connectivity with the Mumbai-Pune highway and the Sion-Panvel expressway. The sense of traveling or the ease of traveling to the other parts of the city only becomes more convenient. So, will you be using the Trans Harbor link, or do you think 250 rupees is a lot to pay for this?
All right, that is why every Mumbaiker is just waiting for, the start of this bridge. It is a highly, highly awaited project. So that is what we're expecting now. But we do need to wind down on this edition of Business Lunch. And as we do that, we are going to leave you with something very exciting for all auto enthusiasts. The McLaren 750S has been launched in India at an ex-showroom price of 5.91 crore rupees. It is the lightest and most powerful series production McLaren to date and features a new rear-wheel drive configuration. It is available in coupe and convertible versions and can reach a speed of 0 to 100 kilometers an hour in just 2.8 seconds.